What is going on? Welcome to the Sharing Profit channel, where we talk about life hacks, flow state, pattern recognition, and most importantly, price action, technical analysis, and all of your advanced analytical training needs. So in today's video, we're going to be talking about institutional pressure. Throughout this video, we're going to be dropping a bunch of hints and clues onto what we think are the best patterns, best techniques to be following, best concepts to be focused on, and some very good ideas on what to be looking for towards institutional footsteps. Okay, so getting into this video, we're already looking at the current price action for total market cap, and we use total market cap kind of as a structure for all of our cryptocurrency market needs. We look at the total market cap, we use this to refer back to our other altcoins or major coins, and it provides a lot of good balance to our technical analysis. So let's go back to wave 1 and wave 2 of the initial movement. So just to give a little recap on here, wave 1 and wave 2 was very nice. We had our final accumulation when price was back at around $3,000 for Bitcoin. And ever since, we've had some nice rallies back up, pushed through our major supply, and we've had some momentum back on the way up. So getting past our last major supply, the high of wave 1, we're in wave 3 now, and we have some more momentum. What we noticed, I believe it was back in January, early January, mid-January, we had what we like to call a divine hidden wick. This is one of the specific tools we use for tracking institutional footsteps. Obviously, we understand with wick rejection it leaves certain keys and certain clues, but when it comes to this new momentum, this new volatility that we're seeing in the markets, there are some instances where we see such massive amounts of volume being added where we will see an institutional wick, or we will see a wick rejection, or even a wick being pressed into new highs, like this instance right here, which leave clues to us where the interest is lying, where the interest is headed. So back in January, we did have a divine hidden wick, which led us to 5.6 trillion. So that's why we have this labeled here. The only way you're going to have this marked up here is if you were watching it live, you watched it happen, or you watched some of our previous videos on that concept. So presuming that wave 3 has concluded with an ending diagonal and has led to our retracement, our correction, which, let's go down to the lower time frames, which seems to have some high momentum, some high volatility. It has Wyckofian characteristics that have been formulated, as well as played out some Elliott wave theory concepts. We're assuming that this is the wave 4 correction. We are assuming that this is going to be more of a prolonged reaccumulation pattern or continuational pattern, and we're going to have to look for specific characteristics while judging these concepts and judging this price action. So now that we're reaching back up to, stay on the 12 hour, now that we're reaching back up to our major supply, as you can see, we're testing our upthrust as secondary test level, which is a prominent resistant level, as well as our upthrust after distribution region, which has very prominent levels that have, let's say, a buyer's climax, secondary test and upthrust of their own. We're looking at this specific region currently as our major supply. Okay, now we're wondering, what is price going to do here? Because there's a lot of people that believe price is either going to break through supply, continue taking off with major momentum, and it's going to be brand new highs. We're going to reach the millions, or the trillions in this case, millions on Bitcoin. I'm just joking. But then we also have people that are going to be like, okay, we're up at supply. Price doesn't seem like it's going to break these highs, and we're going to be seeing the downfall forever. Well, we really have to judge this, because when we're continuational traders or reversal traders, we kind of like to think in worst case scenarios or all of the possible scenarios. So let's talk about the possible scenarios that we're focused on right now, specifically for wave 4 of our impulsive motive wave. Why are we calling it an impulsive motive wave? Well, if you have studied the Elliott wave theories, then you understand that with a motive wave, a trending wave, let's say in an uptrend, we're going to have a 5-wave pattern, a 5 subwave pattern. So with our all-time high, our first all-time high, we're assuming that this is wave 1 of our Elliott wave with a very deep correction, which occurs a lot with the first 2 waves. We have wave 2 formulated, and then recently with this very major expansive move up, we have wave 3. Now we are trading this move with, I think the right word is discretion, with a lot of discretion. We are, taking it by year because of the wick fill that we did see occur in January. Now, if wave 3 really is going to go up this high before it's completed, I'm keeping it in the back of my mind that that is a possibility. But since this wick no longer is relevant on the charts, as you can see, this is just a trend line. Since it is no longer relevant on the charts, we are just going to stick with the current price action. So assuming that this is the end of wave 3 and we ended with an ending diagonal, which is a pretty clear sign that that's the peak, we got our retracement, which was wave 4. This never crossed paths or the high of wave 1. So to Elliott wave traders, we're looking at more of an impulsive motive wave, which means this does have some bullish pressure behind it. Okay, now let's really get into it. Let's get into the continuational concepts. A lot of times when we get into our 4th wave, which is this correction right here, we are going to see a more prolonged continuational pattern try to play out. And it could be, let's say, of the Elliott wave theory continuational patterns, or of the Wyckoffen reaccumulation theories, concepts, and there is many from each points of view. So let's go take a look at that. Okay, we're going to start off by throwing this little golden nugget in here. So this is the sharing profit, I guess you could say schematic, to understand the ideas behind supply and demand, but also it's a really good example of the micro and macro continuational pattern concepts and reaccumulation pattern concepts. So really just to give a quick relation to what we're looking at right now on the charts, we have our all-time high peak. Let's just assume this is the all-time high peak, right? And we have our correction, which in our case actually does have some Wyckoffen characteristics that turned into a reaccumulation concept and is pushing back up into all-time highs. As you guys remember, the supply back up right now, total market cap. So we are focused on, let's say, 3 or 4 main concepts to understanding these continuational patterns. Let's go over to them. Okay, so when we have our peak and then we have our correction, we're going to be waiting to see how price breaks prior highs. When price is reaccumulating, let's say, or distributing, or redistributing, or just main accumulation, there is always going to be market manipulation. We are focused on the most prominent forms of market manipulation with the highest statistical edge. So we follow the concepts from the Wyckoffen theories and the Elliott wave theories, and we apply these to all of our other pieces of confluence. So in today's little section right here, we're talking majorly about the Elliott theories and the Wyckoffen theories. But just to start it off, we know with our main motive wave, we're going to have a 5-wave sequence with most of the time a correction that is this 3-wave sequence, ABC pattern, ABC corrections, ABCD corrections. It's a little confusing at times. And we will also have our ABCDs lead to larger forms of continuational patterns like the triangle concept, or can lead to a flat concept, or sometimes we will have a reaccumulation concept like we do right now on total market cap. But the thing is, and I don't even have it written or drawn up here, but we can have a reaccumulation concept which can lead to a flat concept. When price comes back up to test these prior highs, it can come back down, create the new test of demand before continuing up. That can be an extended flat concept, and we cover those in the training in the course. So if you are looking for the flat concepts, which is the main thing we're preparing for right now, we're watching price come up to test prior highs, right? To test supply. It may need to come back down to test demand, which would be a regular flat if it just tested it, created equal lows, an expanded flat with price breaking prior highs but coming back down to break the demand before continuing up, and a running flat where price breaks prior highs and creates a higher low. I'm only going to break down the flat concepts because it gets a little bit tricky, and we go over these in other videos. But yeah, we're preparing for flat concepts, triangle concepts, and reaccumulation concepts for our continuational patterns right now. So if it's not the flat patterns, then we're paying attention to our reaccumulation concepts. If it's not the reaccumulation concepts, we're paying attention to the bullish triangles, wedges, pennants. And if it's not those, then we are paying attention to our extended flat concepts, which we don't have present here. But since you understand these concepts here, now let's get back over to the chart. So when we speak about institutional pressure and we are talking about the characteristics of these patterns that we need to focus on, these characteristics are the institutional points of interest. So everything that you see marked up on my chart are just some of the points of interest of the institutional pressure. So don't take anything lightly that you see marked up here. It all has its purpose. And let's just break down a couple key ideas so you understand why we believe we are at our point of locality and what the purpose of it is. Okay, so a lot of times people have trouble realizing when we are actually distributing price. Price ends either in a form of distribution, which is Wyckoff-ian distribution, or it's going to end in a form of distribution, which can be a Elliott concept, but it doesn't necessarily look like the characteristics of the Wyckoff-ian concepts. And so on the Elliott side, it can be an ending diagonal pattern, which we have present here. And because of the way it's set up, we actually are able to set up our Wyckoff-ian characteristics as well. So we know that price was distributing when Bitcoin was hitting the 60Ks, when price on total market cap was coming up here. And this actually was a correction. That is because price ended with its ending diagonal. We had our buyer's climax, our secondary test, and our upthrust after distribution. We had our automatic reaction level, which is our main grounds of support. This is why we have support over here. Now we're focused on these characteristics now, or we were after this happened, and these were our Wyckoff-ian points of interest. So understanding this, we understand where our support lies, where our resistance lies, in the types of sequences that we should have testing demand and then coming back up to test our minor supply before our macro supply. Okay, so institutional footsteps, a huge key to being able to track your locality is understanding the characteristics that Wyckoff presented, that Elliott presented. Okay, so now that we're back looking at the real-time data, let's relate it back to the schematics we were just looking at. We are testing all-time highs, right? With a very impulsive, high momentum correction, price could just continue on, right? And that's what we're all hoping for. We want to see price break these past highs and just continue on with momentum. That would be very exciting, very happy for all of us. But what we're focused on are the fact that we have completed our reaccumulation or our accumulation process. We have price already trending outside of the accumulation range, came back down to retest our past resistance, now support. And again, we're coming back up to test these highs. But what did we just cover? We know that an accumulation can lead to a further, more larger fractal flat pattern or triangle concept, or even possibly an extended flat pattern or larger reaccumulation. But with all hopes to the trading gods, I believe price is going to continue on with its momentum currently. But again, we're just preparing for the fact that price may need to come back down to test demand one more time. And, we can't predict the markets. We don't know exactly what's going to happen. One more time could be actually two more times. Or price could just shoot off right now. We have no idea, but we're just waiting and we're checking it day by day and week by week and month by month to see how well price is respecting these patterns, these concepts as they build. And we're trading based off of probabilities, which means that we still have an edge for short-term or long-term setups. We just have to choose what we're looking at and what we want. Okay, so a quick recap of what we just covered and some important concepts to stay focused on. We just spoke about the main motive waves which lead to our peak and potential corrective waves. We spoke about the importance of the characteristics of the motive wave as well as the characteristics of corrections, retracements, and understanding how they lead into more micro accumulation or reaccumulation sequences, or more macro, let's do it like this, reaccumulation sequences. We explained how these corrections can lead to larger continuational patterns like an ABCD or a flat or a pennant or a triangle or a form of reaccumulation. And we explain the variations of those. So understanding, we're really speaking in a bullish sense today, but understanding your accumulation, which leads to your distribution. So understanding your supply and demand is huge. Understanding how a trending market looks, a trending wave. So our usual motive wave, which can be an impulsive motive wave or a diagonal wave. Remember how it leads to very repetitive corrective patterns, which lead to larger fractal accumulation patterns. Reaccumulation patterns, and other forms of continuational patterns. Okay, so I hope this video helped. Hope you took some good notes, and let's get on to the next video. You guys have a beautiful day. Love you.